Hey everybody, this is Nick, and today is October 3rd. Okay, so everything is about interest rates. As far as on the Affordability Index, we're the lowest that we've been in several decades. So that has been a challenge. The market has definitely tightened up because of that. In the last 6 weeks, we've seen a significant increase in interest rates. So about 2 months ago, I predicted we're going to see interest rates between 6.5 to 7.25. Well, guess what? I was wrong, significantly wrong. And one of the reasons, the data that I was seeing was inflation was coming down, but the Fed, however they calculate it, says that our employment and our economy is booming. Man, I'm not so sure about that. But that being said, Governor of the Fed, Michael Barge, just put out in a comment yesterday, it's not how many times we raise rates is the question. Do we raise rates? He said, we are raising rates. It's for how long, and in his comments, he said, it's going to be for some time. So don't think that we're going to see a drastic decrease in lowering of interest rates anytime soon. Do I know for sure? Absolutely not. So let's look at some data that I'm going to switch the screen here. What I look at is if you look at months of inventory, we're the highest that we've been. That was 2022, this is 2020, and this is 2021, and this is 2023. So inventory levels are the highest that we've seen in a long time. If we go back up here, we were at the highest in the start of the year, but remember, our first part of the year, things look pretty good because interest rates kind of got stabilized. Now we're back on the upshoot with interest rates going high. Okay. Here's another little data report I looked at. Price drops. Okay. This is 2022. Remember, June of 2022 was the peak of the real estate industry. And the price drops started to increase from that day forward. And then they slowly died off at the end of the year. Why? Because of lack of supply, interest rates stabilized and normalized a little bit. But right now, look at this. They're on the move again for price drops. So what does that mean? Historically, what that means is the next step is we're going to see home values dropping. Okay, headlines. Home values are going to crash. That's the TikTok and Facebook scaremongers. Okay, this is active listings. Excuse me. This is new listings hitting the market. Okay. The lowest we've seen. Okay. It's still low. So we will not see a housing crash because we just don't have enough homes on the market. Can we see some pricing volatility? Absolutely. If I had to guess, I would say probably fourth and first quarter, we are going to see some changes. Now remember, there is a major difference between a close-in Portland property and let's just say McMinnville. There's a difference between a luxury price point and a first-time homebuyer price point, and it's called supply and demand. So things change dramatically. So what do you do as a home seller? If you have to sell, okay, we still have low inventory, okay? Does it mean it's going to take longer? More than likely, yes. Are we still seeing homes sell quickly? Absolutely. Are we still seeing multiple offers? We are still seeing that. But we're also seeing homes set on the market if they're not aggressively priced. And it's all about your competition. If you're looking, I had a client today that said, hey, I was looking at comps and my house is, from I saw a house around the corner that sold, like 4 months ago at a certain price. Well, guess what? That's gone. That market's gone. In the last 6 weeks, we've seen an increase in interest rates significant. That has slowed the market down. So don't expect things to keep booming. You can't look at 90-day-old data. That's why it's so important you to listen to this little snippet of information because we're the most up-to-date data out there, because majority of the stuff that you're going to see in the news is 60 days old, and that market's gone. So as always, you can always email me. You can call me directly. My personal cell number is 503-953 4110. Hope you found this information valuable, but please don't hesitate to reach out to me directly. This is Nick Shivers. Until next time, I'm out.